Howdy. All right, hey y'all, thanks for joining. It's June 12th, and we're going to talk about something real life conversation that Jim had with large group of people invested in cryptos, and I thought it'd be a great example talking about what the heck is a gain, what the heck is purchase when it comes to filing a 1040, and why is the IRS asking a yes or no question under digital assets in your 1040? What does that have to do with anything? You know? Uh, and then First Class has a good question here about, I'm going to summarize it, how to sell a business that is filing tax returns and has a particular established tax treatment. How do you do that and avoid the capital gains tax? So these are similar things. So Jim, what is it? Before we get into that, Jim, I always have to mention, I always forget. We talk about these things. Okay, now I don't know that I'm going to publish this video. I think it's going to go right in our series. It's going to go in aceofcoins.club, right? So if I have some technical things, I put it in there and I don't let everybody in the world see it. So that's probably what we're going to do here. But aceofcoins.club is where my video series is located, and the aceofcoins.com is where you can schedule an appointment with me. And what is it? There's an order form there. I have a consulting package, okay? So if you guys look at that, if you want me to work on something, I don't sell LLCs. You can get those for yourself, okay? You can have someone set that up for $100, okay? I'm not doing that. I'll do it as a courtesy when you retain me, but I provide consulting so that I'm going to show you how to use the LLC properly for what you want to do. There's many benefits to the LLC that you're not going to be introduced to just because you're going to go to an accountant and the accountant's going to say, yeah, he's thinking is if you're going to be his client, he wants you to have a structure that he can easily file tax returns that he understands. A lot of times accounts will recommend an S corp. There's nothing wrong with that. But many times if an LLC is recommended, you're just going to miss all the benefits of the LLC and it's only going to be used for tax purposes, which, gosh, that's like, having a helicopter in your driveway and then you don't know where to get the fuel to fly it anywhere. You take your car to work, you take your helicopter to work, right? That's my stupid analogy. But anyways, so Jim, you were traveling recently
Yeah.
and,
So yeah,
and
I went back to
found yourself in a bar.
yeah, I went to went back to central point of sale system at a hotel that I was staying at in Milwaukee, Wisconsin, Crown Royal Hotel. And very nice hotel, the largest hotel in Wisconsin by area, by square footage, not by room size, because there's one down the road that's got like 30 more bedrooms, 30 more rooms inside of it. But super nice. And inside of it, they're tied to the airport. So all of these stewards and stewardesses come in. They're overnight. They have a restaurant. So if you stay there, you get either a breakfast or a dinner for free with your room. And so these people come into the restaurant, they come into the bar, they sit down and talk and chit chat. So recently I was there, 15 of us sitting across this bar, and the process of being renovated. And somehow the cryptocurrencies came up and they said, all of this taxable stuff. I'm like, you guys got it all wrong. You guys got to listen to my friend John and go to cryptosarenottaxable.com and look at that thing and understand that they're not taxable. And they're like, well, you're wrong. You read this wrong. So I pulled the video out, had them watch it a little bit on the thing. And I said, well, why do you think that they're taxable? What makes you think you trigger the fact that they're taxable? What is it? Because they look at the 1040, it says your wages, that's taxable. They think it's taxable no matter what. Inside their brain, they think, okay, here it is. Well, they say digital assets. And one of the things it says, did you have or dispose of or get rid of or be gifted all kinds of digital assets, yes or no? And then the presumption is, if you say yes, well, then you got to pay taxes on it. But then the instructions on that particular page tell you to go back and look at the Schedule 1 instructions. I pull the Schedule 1 instructions up, and it doesn't say digital assets anywhere on the form.
Well, if you look at it, it doesn't see people operate on many presumptions. This talking about a gain. So here's what you would say, here's bar talk, right? Someone says, well, of course cryptos are taxable. Then I ask this question. If they're taxable, then how would I pay the tax in cryptos?
Right.
And they would say, well, you wouldn't, you would pay in dollars. And you say, well, I don't have any dollars. I only have cryptos. Am I required by some law to dispose of an asset to pay a tax in the asset? No. Then I stop talking and they have to think about it for a second. If the dollars are taxable always by some measure, okay? But the fact that you have these conditions, like for example, you received it as a reward or something for the payment of property or services. Okay, That comes down to the rules for barter exchanges. If you guys want to look that up, that's not a problem because they're going to say, well, we measured in dollars. Fine, you can measure it in dollars. But then the question comes is there a gain? Where's the gain? The gain, the definition of a gain. Okay, there's no such thing as an unrealized gain. That's an oxymoron. Even the Supreme Court won't make a rule on that. They don't want to talk about that recently. So a gain is when you dispose of property for dollars. That's the tax system's definition of a gain. So if I'm on Coinbase and I'm trading Litecoin for other coins and all this, and my dollar value is going up, let's say it goes up quite a bit. Where's the gain? Where's the gain? If my property is worth more, where's the income tax gain? Nobody can answer that. Even CPAs will tell you if they're being sincere, it's not a gain. It's not, well then, okay, it's not technically a gain. That's what you'll hear. Well, technically, it's not a gain. Well, when is it a gain? When I traded it for somebody else for his dollars. So somebody else is when I dispose of my crypto coins, my virtual currency, I dispose of it in such a way that I no longer care about it. That means I no longer, it's not within my control anymore, and I got something in exchange for those coins, and it happens to be dollars, then you got me. That's when it's taxable. That's called a gain. But these guys, what, when you told them that, or something like that, right? They still shook their head and said, no, no, my accountant said, what? When the value goes up, that's what they're thinking. They think when the value goes up, it's a gain, right? And they think that because on this field here of digital assets, yes or no, it's a yes or no question. Where is that connected to anything? It's just a yes or no question. It's a sales present, it's a sales pitch. It's trying to get you to persuade you to do something. You could say yes all day long. Most of you that are saying yes on this question here are probably wrong, right? Purchasing virtual currency involves using virtual currency to acquire the virtual currency of someone else. A purchase of virtual currency does not include using dollars to acquire virtual currency. That is not a purchase. So the only thing that matters is when you dispose of property, which is cryptos, who said it's property? The IRS. Does that ruffle anyone's feathers? Here's Jim found the Schedule 1, which is interesting because if you look at this field here, it says see instructions. They left you on your own. Like, where are they? Well, they expect you to look on the internet like Jim did and find this. So Jim, what's interesting about this? Here's your instructions. Let's find
if you look
where's
at
the
it
section where
carefully,
it's,
yeah,
huh?
if you look at it carefully, there's no digital assets listed anywhere.
All right. So here, digital assets. Woo, digital assets. Yeah, dispose of them. Yeah, okay. Follow the instructions. Well, what does it tell me to do regarding digital assets? Remember, I told you guys a long time ago, the tax code was never amended. They don't have to amend it, by the way, but there was nothing amended. There was no new change in the laws. And this underscores what I'm saying. Yeah, digital assets are not listed anywhere on your instructions for additional income. What's additional income? They leave it up to you. Look, other income. Look at 8, other income. Then you come down here. This website, I think, is probably from some law firm, I guess, right? Or accounting service. Anyways, they go line by line. Look, we already read this. So look here, line 8, other income. And then they have all these like examples of other income, right? Did you know that jury duty was taxable? I didn't know that. Jury duty pay. Does anybody make any money with jury duty? Anyways, that's reportable. That's interesting. But anyways, like if you go gambling or something or win bingo or something, that's going to be reportable and taxable. Can't argue with that. That's always been that way. But look, they leave you down here at 8Z. This is where everybody's stuck. That's it. That's where I have the tax liability. Yeah. Because you thought so. And so we were talking about earlier, what's interesting is this. Okay, so let's say you have a, like this gentleman asked me today by email. He said, I have this unregistered so and so type of trust. It was some special thing they call it. I don't even know if it was revocable or what, irrevocable or revocable. I don't even know because he said it was unregistered and it was a non-statutory. That's what he said, an unregistered non-statutory trust. And he was asking me about buying gold with his coins, and that's irrelevant. That's not going to be a taxable transaction. It doesn't matter what you're using. You could be using a C corporation. It doesn't matter. Okay. What matters is when you dispose of the property. So let's say his unregistered non-statutory trust acquires gold with Bitcoin and then later sells the gold to somebody. Let's say he sells it to somebody who will want to report it to the IRS, right? So he sells it for dollars, and the party is going to give him a check, which is how they do it. They take delivery of your gold and they send you the check. So the party doing that is going to want to know who's getting the check, and you have to tell them. So you tell them the name of your unregistered non-statutory trust, and if you don't give him a tax number, he's not going to do the transaction. I can tell you right now, most will not do the transaction, even though they're not required to get your number. But let's just say, so if you give him a fake number or don't give him a number, he could do something called backup withholding. Now, this is under section 3406 of the tax code. Now, there's an important reason why I'm telling you this. It's a test. It's for you to understand this better, to show that what we're saying here is correct. If you don't give a valid tax number and certify its accuracy for the entity or for yourself or the entity, the payor has the option. Now, some do, some don't do this. Withhold 30% unless instructed by the IRS otherwise. Now, they're not supposed to withhold unless they're instructed by the IRS. So a single transaction is not going to result in a backup withholding scenario. So don't get afraid. Don't be afraid of that. But sometimes companies just do backup withholding just because you don't give them a valid EIN or tax number SSN, or you don't certify it with a W-9. That's why I have everybody do that. Certify the correctness of the EIN with your W-9. Use a pass-through. Okay, that's if you're going to do it that way. Make it that way. Um, that way, the transaction will not be subject to backup withholding. Now, all my years of doing this, I've never seen someone take the initiative to do backup withholding. Typically, the company that's going to pay you money is going to act only upon the IRS's instructions. So, what I'm thinking is, if cryptos are taxable the way people are acting as if they are, then it would be so easy for the IRS to just instruct all the exchanges to do backup withholding for everybody. Why not do backup withholding quarterly and the exchanges are suited to do this. They have the software to do it. And then you would have to file a tax return in the way they want you to. But what they're doing instead is they're saying, use our software that calculates your tax liability. They're getting you to do it. And I'll tell you right now, this software, without even me looking at all their software, it doesn't even matter. It's all completely wrong because it misses the one fact is that when coins are being moved from coin to coin on an exchange, there is no ownership change. I'm sure you guys know this by now, right? Any questions on that? All right. So let's give the example of other types of property. Other types of property. Let's say you're going to sell a business. Well, it depends on how you're selling it. Are you selling the shares and you're going to sell the shares to another company? And the company is going to pay your company money to become a shareholder in your company. That's one way to sell your company, right? You sell shares. That's a different transaction, right? So whatever tax treatment your company has at that point, we'll have to follow. You're not going to avoid it. If you sell the company itself, like someone buys 100% of your shares, well, then what you want to do, okay, when the shares are purchased from the company, it's the owner of the shares. Like if the company owns the shares, it's the company's tax treatment. If you own the company shares, maybe you own 1%, right? Then whatever tax treatment you would normally have as, let's say, a 1040 filer, then if those shares are purchased from you and you get dollars, then that's your tax treatment. Before the transaction, you can structure the ownership of your company, the shares, if that's how you're establishing ownership, you can do that with a pass-through. So you would do the same thing you would with cryptos. You would convey the ownership of the shares, and however you acquire the ownership in the first place, you would simply convey the ownership to this holding company, let's call it an LLC. And then when the sale came in, it would be purchased from the LLC. which would give you the same tax treatment that you would have if you want to do a pass-through, right? Holding company, deferred taxes, like you would with cryptos or like you would with anything else, even real estate. Does that answer your question? Does that help? Let's see. First, last, you were asking the question earlier. Does that help? I know I make it sound simple, but maybe you're thinking it's not. Property tax is different, okay? The way you come up with the tax is a different method. We're talking about income tax. That one we can destroy all day long. That whole system is just so corrupt. But the property tax is very clear. The millage rates are very clear, and it's not based on a taxable activity. It's based on millage. All right, so any questions? I see you guys have some questions here. I don't quite understand some of them. Whenever you're going to get a 1099, you're going to create a duty to reconcile. If the 1099, okay, duty to reconcile means that the IRS is going to get the 1099 to show that somebody got money, okay? If that somebody has filed a tax return before, it will create a duty to reconcile for the IRS. So if that entity that's getting the money has never filed a tax return, there is no duty to reconcile, and you're free to do what you want with the money outside of what the IRS wants. It doesn't matter what the IRS. The IRS doesn't care. This kind of freaks people out when I say that. The IRS does not care. It cannot. It has no duty to act. Yeah, crypto exchanges do give 1099s, and they do so by email. They're required by federal regulations to distribute 1099s by email. So check your inbox or whatever you have at the exchange. I mean, unless they changed it, I doubt it. So if you want to avoid the tax on it, make sure that your account holder is the entity you want to be using. Yeah, okay, so if the 1099 is issued to an entity with an EIN, okay, like an EIN does not create a tax liability. You can have a valid EIN, give a W-9 to the payor, whoever's going to send the money. And if that entity has never filed a tax return, the IRS will get a 1099 and there will be nothing to do for the IRS nor you. If, on the other hand, you file a return for the entity, the IRS will then have a duty to reconcile. Now, there's something that's underlying all this that I never really talk about that much, but it's important to note. This is not going to help you except for your understanding of how the system, why I'm telling you this is correct. There is never a tax liability until there's an assessment by the taxing authority. So we're talking about the IRS. Why? And why is your tax return not creating a tax liability? Because you cannot assess your taxes. You're not performing the functions of a government office. You're not allowed to do that. So the government has to have an officer, an employee, an actual human being with a name, okay? You might get his badge number or something, but there has to be a revenue officer or an assessment officer that writes the assessment based on reports it received or based upon what you reported. So if you filed a 1040, that alone does not create a tax liability. The assessment creates a tax liability. Why do we have an assessment? Let me give it an analogy. If I go into a restaurant and order a nice dinner for my family, and then the waitress comes over and says, would you like anything else? And I say, no, you can bring the bill now. And she'll say, okay, well, just give me the money. And I say, well, I'd like the bill. I'd like to see what I'm paying for and all this. Oh, no, 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 just give me some money. Right? But let's say the bill comes right now. When the bill comes, let's say I look around and go, oh, you double billed me for this coffee here, right? Okay, I get a chance to talk about that. But if there's no bill, if there's no assessment, then I'm denied the opportunity to object. You see how this works? You guys hear this phrase all the time, due process, due process. Well, that's due process.
John, I've been studying um, and what you're talking about too, and everything else. So, you mentioned the Federal Register before.
Yeah,
So you have the Federal Register, all the Congress bills, laws come through the Federal Register because you have your period of time where you can contest or make comments, comment period, and
right.
it actually goes to the Administrative Procedures Act. Well, guess what? At that point, all the regulations are either uh, considered substantive, which is law, or
Okay.
interpretive, which is housekeeping.
Oh, right. Okay, sure.
All the IRS regulations are interpretive.
Well, they're mostly
All
applied to the agents themselves in doing their jobs.
So
They,
all the IRS, yeah. So your
right.
assessment authority, 6201, 6203, method of assessment are interpretive, have no force and effect of the law. They're all housekeeping.
They're binding upon the agents, not us.
Right. Only them.
And you have a right to rely upon them, you see. That's what I'm talking about. If no assessment is created, then you're denied the right that you have to rely upon the government following its own regulations. Like Ray's saying, these regs are binding upon the employees of the government, not you.
Employees only.
Right. So if there's no assessment, let me tell you what's in the assessment. So this will be maybe make it clear. So in a tax assessment, okay, I have to tell you, I don't know that I've ever seen one. How would I know what it's supposed to look like? Because I'm a crazy geek that I've read the case law, and I've read where the appeals court and the trial courts described what an assessment must contain. It's a document, electronic or not, paper, whatever, it doesn't matter. It has to be, let's say, more or less under seal of an officer, and someone in his official capacity who's an assessment officer, and he looks at all the records and whatever, and he says, okay, based upon, like when it comes to the IRS, there must be a tax imposed upon a it's a type, kind, or class of tax. Income tax is not a type, kind, or class of tax. There is no such thing as a 1040 tax. If you look at your levy notices, it'll say type of tax 1040. Ain't no such thing. Okay. And I can tell you firsthand, I've given you this story before, but there has to be a type, kind, or class of tax. And there must be, like Ray said, there's got to be a regulation identifying what that type, kind, or class of tax is. I'll give you an example. A type of tax would be a tax imposed upon manufacturing explosives or hazardous material, weapons, pistols and revolvers specifically, fireworks, gambling, casinos. Those involve a type or kind or class of tax, and those are specified in actual regulations, telling the agent what to do. So if you have an income tax liability, it's because you engaged in a type, kind, or class of taxable activity that is listed in a particular regulation. Now, this will blow your mind a little bit, but we talk about Title 26. That is not where these taxes are listed. They're in Title 27, which pertains to alcohol, tobacco products, and firearms. And I think they added something else recently, but basically it applies to those things. Usually manufacturers is what it applies to, okay? So back to the tax assessment. There's got to be a date of the assessment. It's so important that the date of the assessment has to be once all the reports are filed. That includes your tax return. So when do you owe the tax? You got to ask yourself, when do I owe the tax? Before I file the tax return? Nope. After I file the tax return? Nope. When I get a 1099? Nope. Here's when you owe the tax, and this is the only time you owe the tax, is when a tax has been assessed. There is no tax liability without an assessment. That's why the date of the assessment is so important. It's one little piece of information on their document that's the assessment. If you can ever find one, there would be a date on there. There'd be a type, kind, or class of tax description, like a speeding ticket, right? On a speeding ticket, they cite the statute, but then they say speeding, or they say, whatever they say for speeding, okay? Then there would be, they cite the reg, and then there would be a citation of the rate imposed. Now, the rate has to come, like Ray's saying, it has to come internally. What is it called? It's internal, the reg for them.
Oh, it's housekeeping.
Housekeeping. It's not substantive. In other words,
Yeah.
so
Yeah, interpretive.
interpretive. So the reg that imposes the rate has to be disclosed on the assessment. Why? Because I can challenge it. If there is no assessment, I can't challenge the type, kind, or class of tax for which I was assessed. I can't challenge the rate for under which I was assessed. I can't challenge the date, because if the date is before it received all the reports, then it can't be valid. It has to be amended at least, right?
Mm-hmm.
Now there's the other element. I'm just telling you the core elements. There's probably more on there, but the core element then is that there's an employee of the government that certifies under penalty of perjury that is true and correct. And this is an accounting function. A certification is an accounting function. Without it, you don't have complete accounting. Jim, you can back me up on that one. I'm not an accountant. Jim might know better than me. If you make an
Yeah, that's
accounting,
60, 65. That's 20. Yeah, Title 26, 60, 65. They're supposed to do that.
so you can see it right in there, 60, 65, right? That's what the assessment is. there must be an assessment for there to be a tax liability. But everyone's running around like crazy people, listening to the news on the internet and reading stupid articles by lawyers who are trying to scare you so you'll hire them and so they can, do all these crazy things and trick you and persuade you to do all these things against your interests. So let's keep things real simple. Let's just make it real simple. It's a great thing that we have, okay? This virtual currency, it's the future, but there's no reason to pay a tax on it because the value of your holdings has increased. The value of your private property has increased. When you dispose of the private property, if the government can see it, because there's certainly ways to do that without the government seeing it. I'm not suggesting that you do that. You can certainly do that. I've done it. But if the government can see it, then there's a presumption of an income tax liability. The rest of it, like I just explained, that's for y'all to figure out. I don't care about that part. What I'm doing is I'm solving the very basic problem of assuming that you have the tax liability. How do we avoid that with the IRS, the standards imposed by the IRS? Well, here's how we do it. We dispose of the property with an entity that doesn't have a tax liability. It doesn't have a tax liability because it didn't file a tax return. It's that simple. It's the opposite that most people think. They think they have to file a tax return because there's a tax liability. But what's happening is you file a tax return and there's a presumption of a tax liability, and then you pay. And then we just go on with life. All right. So at the very least, if you're working in cryptos and you're making some money there, keep it in a deferred status. Use an LLC because it's going to benefit you directly. Why would you pay tax now when you can maybe defer it forever? I mean, that's the name of the game. That's what big corporations do. You can do that very simply by not the having the funds end up in your hands, because then it's considered settled. If it ends up in the hands of a taxpayer, it's considered settled. I don't know if that helps you guys. If it's not settled, if it goes to an LLC that never files, if the IRS were to even make a comment on this, and I've kind of gotten them to make a comment somewhat like this, but it's unsettled funds, they don't care. Well, what the heck am I doing saying this? I didn't know this in the 90s, but when I went to audits, and I went to hundreds of audits, okay, I used to travel around the country and go to audits, mostly small business owners, like, professional offices and just consumers. And by the time I got there, I would have reorganized the client's property, or just after, I would have reorganized it in such a way that he had a different tax treatment. And because I did it in such a way, the IRS would see what happened to the money. They would see there was a new bank account, but they would see the taxpayer over here, and they would just see the cash flow change a little bit. And so I would bring everything. And the IRS would literally push those papers aside and only talk about the part where the client had the tax liability. There was never a question about what I did. So then I realized, okay, the IRS can't care about it because there's no duty to act. It doesn't create a duty to reconcile. This is what the whole system is based on. If you can avoid a duty to reconcile without lying, don't lie. Don't make a false return, because yeah, that's cheating. Okay. Don't lie. You'll get in big trouble with the IRS. Don't lie. They're very friendly. Okay. Just don't lie. They will eat your lunch if you lie. All right. Yeah. Accountants know this. It's disgusting. I'm polite to them. If you want me to talk to them, please don't. I've had enough. But when cryptos first came out, and it was popular from 2017 to like 2020 or so, 2021 is where I stopped doing it. I've talked to accountants in Australia, Canada, England, the United States, many in the United States. And with a very short conversation, they said, well, okay, I guess you can do it that way. And I kind of asked the question, well, why are we having this conversation then? Why is my client frustrated over this? Why haven't you explained this to him like I did? They just don't want to answer that. Yeah, why wouldn't they share? I mean, I guess I don't know. Why would why would you be afraid of telling people the truth? I don't know. Maybe they just think that they should just do what other people are doing, and that if they don't, they'll get in trouble. I watched some woman make a stupid argument today, one of these tards from the Democratic Party make a stupid argument, and her basis of her argument was not on the immigration law, the actual law in the books voted, that was passed by Congress. Her argument was that most people would think this, and therefore we should act this way. That doesn't matter what most people think. When most people already voted to pass a law to make it binding upon everybody, that's all that matters. If a group of people 2 generations later think something differently, doesn't matter. They have to change the law. They haven't changed the law. So it doesn't matter what they think. So it's like with the accountants. You know, and I hear so many people, you're calling me on the phone and you're talking about these articles. I read this on this article and I say, okay, where'd you see that article? Where'd you see that? And I read it and I say, well, okay, look at the bottom of the article. Almost every time you read an article that's about the wrong information on the subject, at the very bottom it says, this is an important matter and you should consider hiring an attorney. And it's published by a law firm. So, I mean, of course they're going to give you this information, and many times it's deliberately confusing. So the IRS made it real simple for us. The virtual currency is proper, just like precious metals. Why are we doing something differently? That's another argument. Why are we doing something differently? They can't handle the truth. Yeah. So, yeah, that's
John,
good.
how did you get the confidence back when you were first figuring this stuff out to know that the rabbit hole you were going down was because at the time it would have been an unknown, right? You didn't know kind of what door you were going down
Yeah.
and where it would lead. How did
Well,
that kind
I
of
was
open up?
kind of stupid but I was also curious. So somebody was telling me some things and he was a tax protester. He was going about it the wrong way, but I thought this guy's pretty emotional about this. I'm going to go check it out. I'm not going to argue with him. I didn't know. I mean, my main interest back then was computer programming, mathematics, and nuclear physics. I love that stuff. And so he starts telling me all this stuff about the tax system, and I said, "Man, you're going to end up in jail." This is back in the early 90s, late 80s. And one day I thought, I'm not going to argue with him anymore. I need to go. I said, well, how did you? I asked him the same question. And then he sent me to the library and I had time because of my job. I had time, my computer job. It gave me all kinds of time. So I meticulously sat at the law library and I went through all the books. And I literally would have 8 to 12 books for 8 hours a day. And I would make a note. I have a yellow pad and I would map it out. They made this so convoluted. That's what got my attention was when I realized that it took hundreds of books to establish I had a tax liability. Because my whole life I thought, well, I'm sure we all have to pay income taxes. Uh, it should be pretty simple. There should be a law that says, here's how you do it. No, it's this huge collection of statutes. So that's why I investigated. What I found out was I found out some of these things. Okay. Well, in 93, I felt like it would be lying if I filed a 1040. That's when I stopped filing. And I've never filed a tax return since then. But I've gone out of my way to not get a W-2 or a 1099 in my name, which is it's not hard to do. I mean, you just have that's your lifestyle, right? You can just choose to do that. But I was kind of stupid in the beginning because I was kind of like, I was a kid. I was in my early 20s and I thought, oh, somebody's trying to cheat me. I'm not going to do it. And then after the fact, I learned about it. And then back then in the mid 90s, in doing this, I met other people that were studying the same thing. They were trying to figure it out for themselves. And I teamed up with them and we started kind of like a research service. And we had every Thursday evening, we used to have like 80 people in a church. They would come, some of the churches would let us have their space, right? So they would come in there and we would have a study group and we would do lectures and presentations and things like this. And those people would then ask me for help and my partner and I would help them and we would discover these things. And then we would go to hearings, we would write documents, and then we started figuring this stuff out. And the first case my partner gave me required that I go to Missouri twice. And it was a farmer. This is the guy that makes the Macy's Day flowers, the Macy's Day Parade flowers. This is his job for 40 years. And the IRS was wiping him out. And so I couldn't pull him out of that situation because he had done so many horrible things. I shouldn't say horrible, but he had done so many things to lock himself into the IRS just beating him up. I couldn't back him out of it. So instead, I went and I found out what he was being taxed for. And that's when I first discovered this, where I pulled his individual master file, his business master file, and I read it. It was hundreds of pages. And I read that his taxable activity was manufacturing. I think it was taxable activity 532 back then. Now they changed it because a lot of people figured this out. But he was being taxed for manufacturing pistols and revolvers. So I read further in the code and I found that if the IRS is trying to collect more taxes than are owed, the remedy is to file a report with the FBI. There's no format for this. So I just wrote a business letter and I sent it to the FBI. There's an office where you send it. And I said, here's what's going on. Here's his IMF. Here's what they've done to him. Levies. I sent that in. And like 30 days later, 60 days later, my fax machine blew up on a Saturday morning. It was back then when they had all the curly paper. And it was the IRS releasing every single levy and lien. So that was a little bit more. That really emboldened me to like learn more. Like, wow, how deep does this go? I mean, it's a whole entire financial system. And then I realized, thanks to Ed Griffin, his book on the creature from Jekyll Island, that all connected the dots. And I realized, okay, you can't have the banking system without the tax system. They have to come together. And that's why they were put in 1913. And there's a long story behind that. So I'm thinking, all right, so how do I, if I like this work, okay, so I like being analytical and I like solving problems, but I can't go around telling people what I just studied. They don't care. All they care about is I did this thing and the IRS wants my money, and now what do I do? So I had to learn the Administrative Procedures Act, and I had to learn what is going on there and all these things. And I learned as I took new cases. And I always work with people. Back then, I always work with people because everybody, combined together was really helpful. So what I try to focus on is, here's how I phrase it: is like my job is to focus on financial risk, private property rights. Private property rights are disregarded and ignored by our entire legal system. So what that tells you is that if you want them, you have to take them. If you want privacy, you have to take them. I'll give you a quick example. If I don't want people to associate my legal name with where I live, I just won't use my legal name with receiving mail where I live. How simple is that? If I don't want problems with the IRS, I won't give them something to do. That's why I'm having these calls. I'm telling you what you're doing that causes the IRS to want to do something. Stop doing that.
Thanks for sharing that, John. That was super inspiring.
All right.
To hear your story. Thank you.
All right. Yeah, I loved it when the FinCEN creatures came out with their business. That was when I first read it, I was thinking, okay, fine, fine, fine. We have to disclose this. And then I kept reading and I was like, oh, wait a minute. This doesn't create a legal duty. It makes you think it does. So I mean, it just goes on and on. So it's always good to look at the rules. One of my friends the other day, he sent me he develops real estate. And so the city they sent his company an arrest warrant because he had debris on the street on the corner, and he had asked the city to come pick it up because they're supposed to. And if you call them, they'll make a special pickup. And he had a lot of debris, but they didn't pick it up. Instead, they sent his company an arrest warrant because his company is the owner of the property, an arrest warrant for leaving the debris on the street, which by that time it was already gone. And he said, "What do I do?" I said, "Well, didn't you get any other notices? I mean, come on, you don't just go out and just arrest somebody. You give them a notice and a warning. You say, if you don't do this, there's a penalty, a civil fine. And then if you do something that breaks the law, okay, now maybe there's a grounds for an arrest, but you don't just start out the gate with an arrest citation." So the first thing I told him is just ignore it. But as you guys know, that doesn't really, but he could just ignore it. It's just that he could ignore it because it's not for him, it's for his company. It's just that they'll try to collect money against his company. So I'm gonna have him do something. But so if I'm going to argue that one, I would ask, when did you give me a chance to fix this? That's part of administrative law. You give me a chance to fix it. I'm doing a private placement, right? So my partner's worried. He's worried. What if we make a mistake? It's the SEC. I said, well, we're going to act in good faith, and the SEC is required to give notice and an opportunity to cure. You've heard this language before, right? All right. So same with the IRS. I mean, I've got many situations where I've been involved in those cases where somebody made a mistake and there's a huge penalty and all this stuff, but there is always an opportunity to amend your return. Just like if you ever see the movies where somebody testifies and then someone cross-examines them and then the judge says, "Would you like to change your testimony?" Can you believe you can do that? That's legitimate. That's something that we can do. So when you file a 1040, you're testifying to the police. So that's an interesting fact to keep in mind. The other thing to keep in mind is that people say taxes are voluntary. I'm gonna tell you right now, taxes are required to be paid. That is the nature of a tax. The question is whether or not you have a tax liability. If you do, you must pay. There's no way around it. That's just how you want your government to operate. If your government can't operate that way, then you can't have a government. So it's just a question of we have to understand what's going on. Does that help y'all? That was a good example. Thanks for the one on the business. I mean, sometimes it takes me a while. Sometimes when I do a consultation on that one, how to structure a sale, there's a lot more to it, by the way. Let me just tell you something quickly. So if I'm gonna help someone structure the sale of a business, Yeah, there's a tax consideration. That's pretty easy to solve. Here's the other part. And there's a one gentleman, he has this amazing thing. He was selling his business for a lot of money, like it was like $30 million. But as he explained it to me, he had developed intellectual property because when he started this business, nobody was doing it. He was just a crazy entrepreneur that said, "Yeah, I can do it," and he had no clue how to do it. And then he figured it out, right? And so he had to invent all these devices in his business for so many decades. And I said to him, "You got a choice here because you can sell your business, which includes your, your apparatus, your customer base, and your trade name and all this, but you have all this intellectual property that you haven't even documented yet as proprietary data, and it's not even on your books. You can keep that property and license it back to the business owner that buys it from you, or you can use it in the valuation process to price it into the sale of the business. It's easier if you license it back because that may give them sticker shock. But you see, there's a lot more to it, and that's why I focus on property rights and financial risk. And intellectual property is another aspect of that. It's well beyond the tax issue. But I just wanted, Jim had this interesting experience with all these guys that believed the same thing. And it's so hard to not believe it because everybody else believes it. And so it just validates the error. And then as human beings, we're more inclined to follow the error. It's safe, right?
Yeah, they call it's been normalized in everybody's mind.
Yeah. And this thing about bill of exchange, so you're asking me, Harry, about this bill of exchange. Yeah, okay. I've done that before. The accepted for value. And I'd say I tried this on 1,000 examples of every type of debt, and it worked on like 1% of them, maybe six, literally six. We got rid of a judgment in court, we got rid of a mortgage, and we got rid of some IRS things. And so, and I believe that it's correct. It's correct in the accounting, but I just think that we're going to be denied that. It's a banking function, I think, and I think we're just going to be denied that. I mean, we are the bankers, but I think the easier way to look at this, and this is where I came in, when I started learning all these things, I thought it's one thing to know all this, but how can I sell it? How can I reach out and help people and do this professionally? Because I literally quit my job once I decided that I wanted to help people doing this work. I was working at Motorola. I was one of these people that worked on the assembly line. I used to wear a bunny suit in a clean room. I don't know if you guys know what that is, but I worked at the end of the line where we tested all the circuits with the machine. But anyways, so I quit that job to do this work, and I love it ever since. And I just had to come up with a way of marketing it. So the way I market it is identify where people are having problems, and I tell people I can help you with this problem, this problem, this problem. And then as we solve the problem, I like to get them into a larger sphere of understanding so that they can go out and do things that are more productive. Like, for example, someone wants to pay off his mortgage because he just inherited some money. And I always recommend that you keep the mortgage and that you use that money to buy something that makes money and then offset your mortgage payments. Always use other people's money. That's getting money to work for you. It's a tool. Don't work for the money. Except if you're under 25, I would say work your ass off. Okay, that's what I tell my children. Learn what that's like, and then learn how to use money, make it work for you. Yeah, and tax rules are helpful, but I mean, understand what they are. So, all right. So yeah, I'm gonna put this video in the members area, so you guys that are subscribers, you'll see it. And certainly, if you guys have any questions from this, I'm more than happy to entertain them as we do more calls. Now, next week, I think I would like to get into the use of the HOA covenants, homeowners associations, and the use of easements. Two different creatures that they're very useful tools. And I want to talk about that because in recent time, I've had some situations where we've been able to use them. But I see where people are not understanding really what these are about. And I wanted to just go into that. Greg, what did you want to ask?
John, can you hear me?
Yes.
Okay, sorry, I was muted there. Yeah, I got a question for you. My daughter is starting to do work with side jobs and is an aspiring author, and she has a number, but but has never filed a return. And I'm wondering if we should go ahead and get her involved with an LLC, and what are advantages or disadvantage of doing an LLC version versus her
Well,
name.
she'll never have a tax problem if she never files a return. Make sure she never files a return. If she wins the lottery, that's different. You file a different return for that one, but that'll be fine. But she can go both ways. Like my children, a couple of them went and got an SSN. So, you know, they have to do their own thing. But they will never file a return, I believe. And they have a choice, though. I like to use an LLC for just managing financial risk. So yeah, I would suggest that she use an LLC. However, she just like writes books and publishes them in her name, and she gets 1099s and income in her name. She's never gonna have a problem with the IRS. You can
Yeah,
go
I was
both
kind of
ways.
wondering how this might go, because once she starts publishing, I'm sure that the publisher is
Yeah.
going to want numbers and names and all that stuff.
Yeah.
And I was kind of trying to keep it more anonymous, but I'm
Well,
not
one
sure.
thing she wants to use is good old fashioned pen name or a fictitious name because who knows, she might be really famous and that might be useful for her.
Right.
Rather
We've
than her
already
real
been
name.
doing pen name stuff, and a lot of
Yeah.
people know her by that name.
Yeah. And in that case, like when you're that young, you're going to use a dozen LLCs by the time you're 50. I mean, so yeah, just start using them. It's a tool.
Okay, I may get with you to set one of them up a
Sure.
little bit later.
Yeah, certainly.
Okay, thanks, John.
Yep. And the flowchart idea, yeah, if then else, right? Your programming statement, if then do this, if that do this, right? Yeah, you want me to do a flowchart if then else. So I think I'm gonna do one better, two better than that. As soon as I can get my device that I ordered, I'm gonna create an interactive prompt-driven AI device. It's a server based that you can log in and you can talk to me and it will give you the answer I would give you. So that's, I think, better than a flow chart. But we could make a flow chart, but I can tell you right now, it'll look like the most complex spider web you can imagine. It'll probably look like a dozen spider webs on top of each other. So it's probably better to have an input output type deal, and what better tool than the AI? Brian?
Hey, John, just a quick question. I decided this year not to file any tax returns or income tax, and I have both my income in two different LLCs. They're
Mhm.
single member LLCs, and I'm just wondering if there's anything I should look out for.
Well, the most important thing you have with the LLC is you're retitling the income. You're just retitling it. So technically, it's still your money, but you're retitling it. So the 1099 will get issued to the LLC. That you can stop right there. But if you want to separate the money, the property from you yourself personally, you want another owner to the LLC. You can add a real partner or you can add somebody who's a nominee, not a spouse, and that'll separate. And here's the key. So you want to separate the property rights from your estate. This is the other way to say this is that you will not have the exclusive right to sell the property, dispose of the property, or spend the money if it's cash, even though you do. But because there's two owners in the LLC, you don't. The rest of the world sees that you don't, even though you do. Does that make sense?
Yeah, that's what I was kind of wondering about, and if that's, but I was wondering if that's actually necessary.
No, it's not.
Okay.
Actually, the most important thing is you're retitling the receipt of the money. If you want a real bulletproof situation, yeah, then it's necessary to add another member. I have people that are involved in levy situations or soon to be levy, like they're getting sued. And so one of my rules is avoid the cost of litigation. I can avoid the cost of
Okay.
defending something if I don't have the property. The way I don't have the property, meaning that the creditor cannot use the rules of discovery to reach into my interest in the company because there's another owner. So in that case, yeah, I would use another owner.
Okay, so it'd be more beneficial in cases of liability for other things other than income tax.
That is correct, yes. Yeah,
And so
yeah.
the other thing is, so I know it's going to be more difficult if I wanted to, get a loan, whether that's house or for a business loan, not having any tax returns filed. Is there any thing I should know
Okay.
about that?
So when you go to the bank, you're qualifying for a mortgage, right?
No, theoretically speaking.
Yeah, so if you're not, let's say you're not
I'd be more
qualifying.
interested in like actually acquiring businesses and if I
Okay.
need a loan for that.
Yeah, that's great. So what I did a call on this a couple of weeks ago, setting up a company for financing purposes. In fact, I did a call with the Strategic Life. VJ and I did a call. In fact, I'll
Oh,
send,
cool.
I'll get the video. And I'll put it up on YouTube. You guys can see it. So what I was explaining is, before you do what you just described, buy a business or whatever, buy another asset, you want to set up a company that has a balance sheet, a bank account, and some regular cash flow. And that could be like $100 a month, regular cash flow, and it could have a credit score. Doesn't need it, but the fact that it has a balance sheet with regular cash flow, and you probably want to have more than one owner, that gives you better standing when you're doing things like that. And it gives you better standing to raise capital.
Really?
It does, because it's a separate business from your estate. It's outside of your estate. Would you rather invest in a restaurant where the owner needs to come there at 6 in the morning, turn the lights on and start the coffee? Or would you rather invest in the restaurant that anybody can do that? And you bought his position and you don't have to do that. That's what you're looking at. That's the difference.
Hmm.
You want it
So,
separate from your estate if you want to attract capital.
okay, so having that situation would um, be better for sellers to kind of see proof of income. Is that what you're saying?
Well, you want someone that's if you're gonna buy something, they want to know about you. If you're having a broker, the broker will coach
Right.
you on this. The broker will say you need to be respectable. Like if you show up at a business meeting, wear a suit, right? If you show up to purchase a business, you need to have a business structure, something that's respectable, right? And
Yeah.
one facet of that is to have a good balance sheet. Even if it doesn't have a lot of money on there, you just start with a balance sheet. So have your accounting function rolling when you're going to do that. And it'll only take you a few months to set that up.
Yeah. I guess my main concern is just proof of income, not having any tax returns to show.
Well, why would that matter if this is what I'm saying, okay? If you have a business set up properly, then your personal income is irrelevant.
Yeah.
I mean, look at when IBM buys something. I use IBM as an example frequently. If IBM buys something, does anyone investigate the shareholders' personal finances? So you have to look at it like that.
I got you. Okay.
I mean, look at the
Okay, cool.
seller. What are we looking at for the seller? Do we care about his solvency? We don't really care about his solvency unless we're going to be his partner, right?
Yeah.
We're just going to buy an asset that we've isolated on a balance sheet, and we know what the risk is. It's not associated with his personal risk. You want a situation like that. So when people start asking you your personal information, say, whoa, whoa, wait a minute. Why? I'm not the
Yeah.
buyer. I just work for the buyer. The buyer is my LLC, right?
I see it. I see. So there's not too much limitation not having tax returns to show, is what you're saying.
Correct. And again, you have balance sheet.
Okay.
And a tax return is a balance sheet.
Yeah.
Now, there are some situations where you want a balance sheet for your company. Let's say it's showing some decent income. Let's say you got $20,000 a quarter, and you want to have a balance sheet for that. Let's say it's got 18 months worth of balance sheets. And maybe the seller or the buyer, whoever you're dealing with, needs third-party authentication of your balance sheet. In other words, you didn't do it in your basement. You didn't do it with some bookkeeper out of Craigslist. You have an accounting firm that created the balance sheet, and someone's going to testify to its accuracy. That's where you want to take it. Now you've created something that can work on its own, and you work for it, but it's not you, and no one gets to investigate your personal finances unless you're going to do something like banking, okay? In
Gotcha.
the financial world, there's a little bit different there because you got bonds and things like that, okay?
Okay. So for proof of income, I have other options. I can get a balance sheet written up by a bookkeeper or accountant, or I
Right.
can create a
Yeah.
separate LLC that, um, well, I don't know if that doesn't make too much sense to me because I don't know how that would be good for proof of income, but I can see the separate balance sheet on an actual business being
You're
good
getting
for proof of
financing
income.
from a bank who's asking for you for personal proof of income, right?
Yeah.
That's because your business can't act as the guarantor. The only reason the bank is doing that because it wants to make you the guarantor, even if the business is getting the financing, you're the one getting the financing. You're talking to the wrong people at the bank. You need to talk to commercial lending and you need the correct structure.
Well,
Then you,
sorry, I was speaking theoretically. That's actually not
well,
happening.
oh,
It's
but
just
you're accurate though. That's what they do.
yeah.
So now, the example I gave a few years ago, a gentleman did that. He was totally unprepared, but he muscled through it and he bought a business. And then the bank itself called him after the sale. The commercial lending office called him and asked if the bank could work with him in structuring his company so he could buy more businesses and they could lend him more money as a business without him being the guarantor. They actually initiated that with him. They want those deals.
Yeah.
Yeah, so that's just being an adult in business, that you have a proper company set up and you're respectable. I mean, certainly you can do things in your name, no problem with that. But then you have a different way of managing financial risk because you're mixing everything together. It's all in your estate, right?
Cool. Good to know.
Yeah, I'll do this link. I'll put the link on Telegram for you guys, but it's not going to be on YouTube, and then I'll put it in the members area. And then I may go ahead and, add some more to this, but yeah, I'm not going to just let everybody see it.
John,
Yes.
when you say subscribe, so that's because I've been telling so many people to check you out because they are in, hot water as well with crypto. But so you do not put these up on YouTube?
This one I won't. Some of them I do. Now, the videos that I have for technical information, and I give you forms and examples, those are going to be in my video series. I don't want to, yeah, they're not
And
available.
that's on club.club.
Yeah, aceofcoins.club. So we just have a new video series where I took some of the older videos and I put them in there, but I put some new content in the very beginning stages. Now, here's something I'm new. I mentioned this last week. In the video series I'm doing on aceofcoins.club, I've got 2 that are going to become 1. So don't worry about having to buy 2 subscriptions. It's about cryptos are not taxable, okay? And LLC strategies are kind of probably going to merge into one. I'm not sure exactly what we want to do yet there, but I am going to show you all how to do things using AI, how to interact with the AI and create things and have understanding and do certain things that, you would otherwise probably be at a loss if you didn't have somebody like an attorney or somebody. So it's going to be something new. But yeah,
Okay.
aceofcoins.club.
Okay, thank you.
Yeah, thank you. And send them the cryptosarenot.taxable.com. Send them on that path.
I did.
Yeah.
I have, well, I
Okay.
sent out this to 5 people tonight. I see one of my people are on who
Oh,
you'll
okay.
probably talk to. He's also a John.
No,
Anyway.
fantastic. Okay. All right.
Thank you.
All right. Appreciate that. All right. Yeah, well, I'm gonna get back to work. I do work late, believe it or not. But start the weekend too. So thank you all for being on the call. Appreciate all
Thank you,
your
John.
Alrighty.
Thank you so
John.
much. Have a great weekend.
Thanks, John.
Bye-bye.
Bye
Take
now.
care.